guys, Enrique here with the Diaz team at Fathom Realty. I wanted to get on here and discuss real quick something that I came across here, this article. The current administration, they have proposed the idea of a 50-year mortgage. And I just kind of wanted to dive into that a little bit, kind of talk a little bit about the numbers. How is that going to look? Is it really going to be more affordable in the long end? What are the pros and some cons? Um, so again, I was just reading this article and it goes over some of the ins and outs of how that 50-year mortgage could possibly look. And I just wanted to again talk about the numbers. Get into a 50-year mortgage because one, compared to a 30-year mortgage, your interest rate is likely going to be higher. As is the case with a 15-year mortgage, your rates are a little bit lower compared to a 30-year mortgage. So assuming if that same rule applies, that 50-year mortgage is going to have a bit of a higher rate. But one thing that I noticed with this is if this product were in fact to happen, a buyer's purchasing power could potentially go up. Here's a quick scenario. The average, more or less, median income here in the United States is at about 80,000 a year. Assuming that they are doing a 30-year term at a 6.2% rate with a down payment of 10%. This is all just an estimate based off this calculator here. Your purchasing power could be $317,000, a little bit, just right under $318,000, call it. But let's say we keep the exact same thing and all we change is the term to 50-year term. We calculate that. This exact same person, at least according to this scenario, they can actually potentially afford up to $355,000. Big change, that's a big number difference in terms of how much they can afford in terms of purchasing power. So that could be of a benefit, but let's actually dive in a little bit deeper and look at what is it going to cost a buyer if they were in fact going to go for a 50-year mortgage. All right, so here we're gonna take a look at the numbers. Assuming we're buying a house at $400,000, let's say again you're doing a 10%, and we're gonna stick to the 30-year term so you can see 6.3% rate. Again, I'm not a lender. We're just doing this just to kind of see what it could cost. We're just looking at the principal and interest of the property. What is it going to cost a buyer every month to afford a home at a $400,000 with a 10% down payment, 30-year term at a 6.3% rate? Your payment, more or less every month, is going to be $2,228.30. As of course, when you borrow money, interest is the fee that you pay for borrowing that money. So your total out-of-pocket expense for buying a house at $400,000, if you were to keep the property for the full 30-year term, would be at $802,000. So it shows here your amount of interest that you'd be paying on the loan is at $442,188.74. In this case, let's say you do a 50-year mortgage. Again, the exact same thing. All I'm changing is the term. And we calculate that, your monthly payment does go down to $1,975.35. However, your total out-of-pocket expense is going to rise significantly. So there's a total of 600 mortgage payments. And if you were to keep this house, this $400,000 home, for the full 50 years, your total out-of-pocket expense is going to be $1.1 million. That's gonna be the cost basically of financing a house for $400,000 property. And in terms of how much interest you're going to be paying, it's going to be $825,208.95. This could affect building your equity on this property with a 50-year term is going to be a lot slower because you're paying mainly a lot of interest. As you can tell from this little chart here, you're paying about 70% interest and you're only paying about 30% of the principal. That's a really, really high cost just to save maybe $200 or $300 every month. I mean, there's other factors, of course. Maybe your house can appreciate with time, But again, I don't know if going with 50 years is going to benefit people in the long run. Maybe right now, yeah, they can get their foot in the door and get a nice property. They can afford, again, they have a higher purchasing power, but this could mean, a lot of interest. Maybe you're barely paying anything towards that principal. And so your loan pay down and your equity is not going to be as much. And like I said, other factors are also important. What if the housing market happens to go up and your home appreciates a lot? Hey, well, then there you go. You can go ahead and probably sell the house, or you can maybe even refinance out of this 50-year term loan and get into another 30-year term. Um, Again, it's pros and cons for sure. I just thought I'd touch on that a little bit. It kind of piqued my interest. I wanted to go over the numbers. I read that article, saw a video about it, and I thought, hey, let me hop on here and talk about it a little bit and kind of go over something. But yeah, hope you guys enjoyed the video. Contact us. Contact me if you guys need any help selling, buying real estate, investing in real estate. Enrique Ulloa with the Diaz team, Fathom Realty. Hope you guys are having a great day. Take care.